So a question we get often from our viewers is, will the stock market decline kill my retirement? That's a very loaded and complicated question, but I think the answer to the general masses is one, if you're pre-retirement, you have to have financial planning done. You have to understand what the risks are and where to place your assets in a portfolio. When you hit retirement, your money's really starting to just work for you at that point, because for most of us it has to go 30 to 35 years without us working. So it's not like you worked all this time and you're slowing down, but your portfolio is actually picking up that slack. So can the stock market decline alter retirement? I mean, it can, yes, because you didn't plan. In our planning that we do, we always assume people retire into a repeat of the financial crisis. For our clients, no, the stock market decline has not changed anyone's mind on retirement. They're still on track because we have not experienced anything close to what happened in 2007 through the beginning of 2009. So if you aren't allocated properly prior to retirement, yes, because if you loaded up on all growth funds over the last few years, those growth funds are down substantially more than what the overall market is. So if you didn't start pivoting your portfolio to prepare for retirement in your equities, then that could be a problem. If you had bonds that were too long-term, you're invested in the aggregate bond index instead of short-term bonds, that could derail the retirement. Doesn't mean that it's off indefinitely. It just means that you might have to save a little more or not use the portfolio as much over the next couple of years if you're just now doing retirement planning. Otherwise, no. Stock market decline should never derail a retirement of someone who's been planning for retirement through a proper financial plan, not a time value of money calculator. So many brokers will do a financial plan in front of a client and they'll do it in 20 minutes and they have all these answers. That's not financial planning. That's a time value money calculator, and they're really just looking for other ways to sell you stuff. But for us to go through our 3-step process of retirement planning takes about 6 to 8 hours of our time. Then we've planned for those situations like we're experiencing now and much worse. So for most financial advisors that are planners first, you should be in good shape.